All right, all right, all right. What's up, everybody? What's up, everybody? Good morning. It's Wednesday. Happy hump day. Hope everybody had an absolutely amazing trading day yesterday. We're about to get started. We're about to get rolling. I'm fired up today. I don't know about you guys. It's a pretty good day. We spoke earlier in the week about the fact that it looked like the markets were putting in a bit of a bottom and that there was some momentum that was being built. And really, more than momentum being built, there was momentum that had slowed on the way down. And from there, from that area, we've rallied, I don't know, 120 points. So we have seen a little bit of some of that bottom that's been put in, and some of the bullishness has returned. So hopefully, some of you guys have been able to catch some of that move and make it run. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so the alerts, they happen. There's a little thumbs up icon down there. If all of you guys could hit that little thumbs up icon, it would mean an absolutely the world to me. We really appreciate it. And really, giving comments helps a lot. So if you're watching this not live, you can still leave comments on the site. All right, let's go ahead and get started. Let me shrink my head. Lord knows my head is better when it's smaller. Mr. Hammer, good morning, brother. I love to have you join us, John. One of my favorites, where people have been known to want to conquer the world. Hey, listen, we're always trying to conquer. All right, so let's go ahead and look at the ES. Now, I will tell you, yesterday was a frustrating day in the ES for me because we identified a pretty clean level, and the market came just a bit outside. I mean, we came just a smidge below that ES level. The tightest your stop could be on this trade was right here, right? When we look at our 15-minute level, the tightest my stop can be is outside of the leg in of the 15-minute candle. So that's the tightest your stop could be. But where's our recommended placement on this stop? Ultimately, when we look at some of these levels, we want to look at the absolute tightest you can place your stop as well as the recommended stop placement. Okay, and knowing that, I think, is also pretty helpful of where to identify the right stops to place. It's just below the pivot. Typically, it's going to be just below that pivot. So, how many of you guys were able to catch this ride yesterday and stay in for a bit? I will tell you, I chose the tightest stop placement as the one that we had looked at yesterday, as far as the stop placement on there, and then it just rocketed up, and we've rallied up pretty much all night. So very good, John. I love to hear that. And listen, that's the right way to do it. Is below the pivot. This was one where there was a wick out there just to get us the stop, and so. But the good news about that, and I will say this. You've got 3385 by 3383. That's going to happen, right? Oh, absolutely it would, Alex. No doubt. But Alex, I'm okay tripling the risk if it's going to keep, in this case, would you have been okay tripling the risk, staying in the trade, right? That's the key, is that sometimes it's going to keep me in a trade longer in order to do that. So your stop, John, your stop was 3375, taking it off the hourly level. Yeah, and off the hourly level, you're looking at this zone right here, right? I mean, that's the hourly level is taking it off of that level. Well, either way, we can't armchair quarterback it and go back in time, right? So we're going to now take a look at what is the next opportunity if the markets are going to continue to rally up. So if the markets kind of continue that rally up, on our 4-hour chart, we've begun to come up. Now, one of the indicators that I do use to kind of see swings a lot more cleanly are zigzag indicators. I like the zigzag indicator. It actually is a pretty good indicator to see, okay, what's our overall swing highs and swing lows. I set my zigzag indicator to 0.5%, so 0.5% movement on these swings. And it's a very, very simple, clean indicator to just kind of clearly see the swing highs and swing lows. And if you're looking at this 4-hour chart, if you want to use that zigzag indicator to give you your swing highs and swing lows, by all technicality, I don't yet have a new higher swing low. By getting above here, I've gotten a slightly higher swing high. Now, if I want to do it without the indicator, which you certainly can do it without the indicator, Now you might say, well, this is a swing high and this is a swing low. What the indicator does, it'll remove some of that subjectivity. It doesn't mean that it's necessarily right, right? It doesn't mean that it's that doesn't mean that's necessarily right. What it does though is it standardizes your swings, right? And when your swings are more standardized, because you're using a mathematical element to calculate what a swing would look like, then what you can do is you can assess trend much easier. But either way, we believed that we were going to reverse on Sunday. Well, we were talking about it Sunday night. That we felt like, okay, the markets look like they're gaining some momentum. There were a lot of individual stocks, and the other piece that we looked at was the fact that our SPX. We used the SPX to see this. That our SPX had hit this 20 period moving average below the 20, but above the 50, what we call the bull area, right? It's what we call the bull area. Now, we have rallied up. On the SPX, you can see that yesterday it looked a bit like a reversal candle, but we're going to open up significantly higher based on our overnight trading. So I'm going to continue my overall net bullishness. I think that makes the most sense is to maintain that net bullish area. I would agree, Liz. We are at a very key area, and we're at a very key area because we're sitting just below what would be kind of an inflection point that says if we keep running up, then there's really not a whole lot to stop us from getting to new all-time highs. I believe that. If we get above this 3450 area, we have not a lot to stop us from getting back to new all-time highs. And so every supply level above me is going to be a confirmation entry. But when I look at my demand levels below me, I still have opportunities to enter on limit entries, knowing though that, this could be a breakout line. Now I'm going to draw this breakout line here. This is a good breakout. And the reason is I've got one touch, two touch, and then my third touch would be in case there is basing just below the level. So currently, have we received the basing necessary just below the level? The answer to that would be heck to the no. And so there's no basing yet just before the level. So the other side of that is if we do get the breakout, what's my room to roam look like? Well, I do still have supply right here on the hourly chart, and I've got some supply right in here that doesn't give me a tremendous amount of room to roam. So here's what I'll say. If you're looking at an intraday small time frame trade, I think you've got a pretty good little move here on the if there's quality basing for price to go up. Now this is a confirmation short, which means it may not hold. I could see us popping through there today and then retracing back down. And Joe, good eye, man. You typed it in probably just before I drew the line or as I drew the line. What about the demand at 3,400? We do have demand right here at around 3,400. Now, if you take this demand, your stop needs to go below the wick, right? Your stop needs to go below the wick. The absolute tightest your stop could be is 33.93. That's really the best level on here. And yes, that widens out my risk, but it also keeps me in the trade a lot more frequently. I think it's very, very important for everybody to know, okay, how do I place my stop in those in those positions? And I've got to know how to place my stop inside of those positions. And so that would be the area that I would look for is that level. So real quick, for those of you guys, I'm going to slide this over here. Here's the Traders Army website. If you go to Learn, underneath Learn, you will see all of the on-demand courses. One of the on-demand courses is stop placement, and it's underneath advanced price studies. So for those of you guys that are Traders Army members, go watch this one, stop loss and target placement. That is where that course is located, just so you guys know where it is and why we would place that stop. I know a number of you are fairly new, so take a look. That's where that class is. All right. So in the ES, that's the level I'm looking at for a retest stop, obviously down below this region here. If we get any basing going into there, then that's not going to happen. Now remember, we've got FOMC, so we may be a little bit quiet today heading into that FOMC. And what's our rule on trading just before an announcement, right? What is our rule on trading just before an announcement? If there's an announcement coming out, how do we handle that in our trade laws? Because oftentimes what I see from an announcement is that um, we'll get wicked up or wicked down one way or the other, right? And when I say wicked up or wicked down, you sometimes get a candlestick that looks like this, where you have, okay, the candlestick maybe looks green on the actual announcement itself, but along with that green, candlestick is you'll sometimes get a wick that looks like this and a wick that looks like this. Now, what's that wick designed to do, right? What is that wick designed to do? Exactly, Liz. It's designed to whipsaw, or as they would say, whipsaw. It's designed to whipsaw us out in the trade. And I don't want to get stuck into a whipsaw effect before a big announcement. Are there people out there actively hunting stops? Are there people out there that have the money to actively hunt the stops of individual traders? You know, in reality, one player out there who's actively hunting stops in the whole S&P, I don't think it's quite that big. But are there enough people out there to do it? Absolutely there are. And I think that's really where the bigger concern is that there's enough people out there and they're all using the same area. So so that's the level I'm looking for in the ES. Just be cautious of the announcement. Now, the NASDAQ did not come back to our area of demand yesterday. We didn't get quite the pullback we needed in order to get long. Yeah, those algos are really what I look for on that, Andrew, is what are the algorithms going to tell me and what are the algorithms going to do? And so if I'm looking at the NASDAQ, the pullback area is really the cleanest level. Even paranoid people have enemies. Good point, John. Everyone has an enemy. We've got to see what happens. When I'm looking at Murray says, I use unadjusted charts and I only have one touch on the breakout level. Are you talking on this NASDAQ area right here? So Murray, what I would say on that NASDAQ level, if I don't have 3 super clean touches as of yet. I've got one touch here. Oh, on the ES. Okay, I'll go back and take a look at that one. What I like about this NASDAQ level is that it acted as support. Old support oftentimes acts as new resistance, and I'll still need basing inside this breakout, but that basing would have to occur somewhere right in here. Somewhere right in this range would be where I would need basing. Now, that basing only needs to be 2 to 3 candles. It only needs to be 2 to 3 candles, but I need that basing to occur very tight and close to the line. The tighter and closer to the line that basing occurs, the better probability I have of more orders being piled up. I mean, think about what's happening when price gets to that area, right? What's happening inside of our bids and our offers? And if you think about what's always occurring, is you've always got orders constantly flowing in. And when those orders, the new orders, are constantly flowing in, what they're coming up against are existingly placed limit, stop limit, and stop market orders. That's really what they're doing, is that there's orders that have already been placed. I mean, there's definitely, would you guys agree that there are definitely already limit orders to sell that have been placed at this 11,578 area? 578, 11,575. Would you guys agree that there are already limit orders that have been placed to sell up there? What do you think? Yeah, there's definitely limit orders that have been placed already to sell in that region. And those limit orders that have been placed to sell in that region, what they do is if there's enough buy orders coming in, to go right through there, if there's enough buyers coming in to just slice right through it like a knife through butter, then that may not be sustainable, right? It's like sprinting. It's like sprinting down the track. I can't sprint 100 meters any longer without stopping and having to really, really take some deep gusts of wind. Now, I'm 42 years old. I could do that when I was in my 20s, but I can't do that any longer, right? I'm going to need to stop and take a breather. Well, what the basing in front of a level does is it allows the market to take a bit of a breather And those existing limit orders that are in there to sell match up with the buy orders that are coming in. Now, if there's a little bit of a breather, now what you get is more time for more buy orders to accumulate. And the additional accumulation of buy orders inside that area does what to price once we get to that area? Well, what it does is it forces that price to really go up higher. And that is why the basing before a level is key in a breakout. I must have basing before a level because what I want is an accumulation of buy orders at a particular area in order to cause price to thrust higher. Well, in order for that accumulation of buy orders to happen, I've got to have enough sell orders there in order to stall price to give it a moment to build up some momentum, right? So hopefully that concept makes sense to everybody. I don't know if you guys trade breakouts or not, but we talk about that breakouts are the kiss of the breakouts. Basing before a level is important in a breakout, and it's the kiss of death on a reversal, because on a reversal it's just the opposite, right? On a reversal it's just the opposite. If I get basing right here before this level, well, now I'm piling up more and more sell orders as it's going to run into my limit orders of buying down here, and that's where I don't want to see basing. So always think about it. We want basing before a breakout. We don't want basing before a reversal because they're basically the same trade. They really are. They're really the same trade because I don't really care about what it is. I care about the order flow that causes those orders to exist, right? That's what we care about, is the order flow that causes those levels to exist, and I think that's kind of the way to think about it. So I know that was kind of a long, lengthy discussion on breakouts today, but hopefully it makes sense to you. All right, NASDAQ. Russell. So looking at the Russell, we did yesterday say that if you're going to get short, the Russell's the one to get short, and then the Russell decided to shoot way up on us anyway. So it's done a nice job of continuing to rally up. When I look at it this morning overall, and I'm looking for a potential reversal zone, you're sitting right below what normally would be a pretty good area of supply. Now, it's not just sitting below what would normally be a pretty good area of supply. We actually hit it once and got a little move away. I'm not sure if anybody took that one yesterday. And now we're hitting it again, and we're basing just in front of the level. This is actually a pretty good area for price to move higher on a breakout. So I don't have officially 3 touches at that exact price point, but I have multiple touches inside of the zone. So I wouldn't be surprised to see this one break above 1550, and then I think you've got clean air up to 1560 with really your pivot there above 1570. Coming out of weekly demand on this one based on this pullback right into here, if you're looking at that level right there, and that's actually a pretty decent, Fibonacci retracement of this. It's that move up and then a rest, and then the next leg should thrust us a bit higher. By the way, that would put us in a territory that's closing in on the all-time high, but still nowhere quite near the all-time high in the Russell. Whereas in the S&P, we have already gotten to that new all-time high. And in the Dow, by the way, if I go back and look at the Dow, we have not gotten quite back to that all-time high. Matter of fact, I think the Dow is actually the one, when you talk about weekly charts and nice weekly pullbacks, that's setting up for the nice, next leg higher. It's the prettier of the two. Once again, we had a nice pullback, and we talked about the fact that for swing traders, you were going to start to see price move a bit higher. And so that's what we've seen so far. All right, so those are my equity thoughts for today. What questions do y'all have for me in regards to equities before I move on to commodity markets? I'm going to share this grid with you so that you all have a copy of my charts. You can, now, once again, when I share these charts, these are not necessarily recommendations of trades that you're supposed to take. These are just educational examples of what the markets are doing from a technical perspective. So please, I don't want anybody to, oh, well, Chuck said to go long here and he failed. No, I didn't say to go long there. I said this is what the market looks like it should do. So keep that in mind. I should probably have some sort of a disclaimer on there. So, oh, is it really, Han? Well, thank you for that. I will fix that. I will fix that, Mark. I will fix that. I'll fix the title actually right now. And that has been fixed. You are awesome. Thanks for that. All right, the title's been fixed. Do you think the zone on the Dow, 27,730, looks good? Attention to detail, Zach, is 1984 is not always my strength, as Liz will remind you when I get the date wrong on the trade feed, which is why I love you, Liz. 27,730. Let's get to that. 27,730. I'm a moron. Right here, this area here on the hourly chart. Okay. So yeah, I mean, I think that's a pretty clean level. The only downside of this level is that it is a bit of a retest. It's a bit of a retest of this level right here. Okay, that's the retest area of this area in here before we then got the move away. So while I think that it's a pretty clean level overall, it's a bit of a retest of a prior level that was established over here to the left. And so that level, there's still going to be some buy orders left inside that zone. I would just be very cautious of any basing before that level on a bit of a pullback. But I think it's a pretty good. I definitely think there's some room there, Zach, on that trade. It fits all of our criteria, right? Our criteria is, did it have a strong move away? Yes. Was it formed at a good time of day? Yes. Have we been back and touched it yet? No. And is it going with my big picture trend? Yes. So all of those things, you line all those things up, and absolutely that would make the level very valuable. All right. Commodity market. So looking at our commodity market. So I got an alert last night on crude oil, and I got my alert. My alert triggered on crude oil last night at, let me get the exact time. So my alert was texted to me and was triggered at 8:56 p.m. So at 8:56 p.m. last night, there's my alert chart there. At 8:56 p.m., my alert was triggered, and we talked about this alert yesterday. Why did we set an alert, and why didn't we just do a set it and forget it trade? Can anybody remember? What was our reasoning why we said, you know what, I'm not going to do a set it and forget it trade. I'm going to set an alert so that I know what happens as price is approaching that level. And once again, it's a lot sexier for me to talk about just set it and forget it and let the market do its thing. Trust in your level. Well, that's all fine and dandy until we get the kiss of death. It's all fine and dandy until we get the kiss of death. And what is this? This is the KOD. We call this the KOD. We call this the KOD because as the KOD, we got basing in front of the level. Price told us there's no reason you should get in on this thing. Now, even if you didn't listen to the basing and you decided, I'm going to get in on this trade, we touch the level right here, right? And then 1, 2, 3, 4, 5, 6 candles later, even if you didn't take the stop out, it had told you, hey, listen, we're probably not going anywhere. So that's the main reason why we set alerts. It becomes set and regret. That's a good way to put it, Liz. Now, I will say that the basing before the level that allowed us to thrust through that zone is a valid entry. So I think that the basing before the level that allowed us to thrust through the zone does now become a valid entry. Is it a great time of day? No, it's not a great time of day. Much better time of day is going to be down here at the market open yesterday, where we rocketed straight up. But this level is still okay, especially for an intraday trade. I've got a very small amount of risk. Dennis, QM just rolled to the X. QM's usually one day ahead of the CL, so expect CL to roll tonight to the X. Thanks, Dennis. Thank you, sir. And and by the way, when you're trading futures, you always have to understand which contract is going to roll to. No, Nick. No, Nick. Nope. I'd prefer not. So you've got a nice area down here that we may get a decent pullback. And if we get a decent pullback into this region, you've got about a 17-cent stop, maybe a little wider than that in here. If that's too wide for you, then you could theoretically go to the 15-minute and cut it a bit down to about 33.48. So that would give you a little bit more wiggle room. But I think that the better trade is to take a look at the hourly level. On our 4-hour trend, has definitely put in a bit of a base. down here. We had a bit of a base down here, and as we have broken higher, I think there's still room to make it back up to 40 on a pullback. So, all right, gold. So gold, we had a little hourly demand level that didn't hold at all, and so love to get a better one on this. Um, Yeah, Dennis, I will tell you what, for me, it's really just looking at the volume. The volume is going to give me enough indication of kind of where I need to go. And you can see that, especially when you're utilizing, that active trader window or the dome or the matrix or whatever it is that you're trading off of. Because I'm going to get definitely that wider spread for sure, almost instantaneously, right? I mean, you're going to see that pretty quickly. Um, on the GC, on the GC, I've got a very strong drop in here. This was a much surprised drop, frankly, down into this area, which I thought was a pretty clean zone. Now, this was once again one of them that was not formed at a great time of day, and so I'm okay taking them when they're not formed at a great time of day if the level is small enough and I'm going with the trend direction. Unfortunately, this one just popped right through. Now, it's continued to rally higher. When I look at this on a 4-hour, what's my 4-hour telling me? My 4 hours not giving me a whole heck of a lot of great indication, right? I've got a move up and a pullback, a move up and a pullback, but even my 4-hour is telling me, yeah, meh is what it's saying. If I throw my MACD on there, we do see that I've got slightly higher swing highs, but I think that overall my momentum is slowing. And so um, now a good way to know that your momentum is slowing is when you get stopped out of a pretty clean level, right? That's another clear sign that your upside momentum is tending to slow down. You get stopped out of a pretty clean level. So if I look above me, let's go to a smaller time period to see on a 15 over there to the left if we have a quality enough zone to look at a short. And you do have, now this is a fairly tight little zone in here. Absolutely, it could be basing to go a bit higher. Um, it could be basing to go a bit higher on the larger time frame for sure. I'm looking at a smaller time frame potential short up here, but remember this one's going to be affected by the FOMC announcement as well. So keep that in mind. This one's going to get pretty affected by the FOMC announcement, just like the others. All right, I'm going to move over to bonds and currencies because I'm already at my 30-minute mark, and I'm trying to keep these things at 30 minutes. By the way, thank you guys for your grace yesterday, being okay with me shutting it at 15 minutes. It was a beautiful first day of school for the kiddos to get their pictures. So looking here at the ZN, our 10-year Treasury note. What was our overall view on Sunday about this thing? Sunday it was, Monday it was, Tuesday it was. What was that? It was blech, right? Not a whole lot. And so that's kind of where we still are sitting, is that there's just sideways. There's not a lot to do in the bonds, so I'm going to leave that one be without really adding anything more to my charts. I'm going to leave it alone. So you want me to go to Shar? Let me take a look at soy for you. Now, we had a level in soy yesterday on a 15-minute right in here. We came, click it here to the 15. So we came to the 15-minute level, and then what did we get here right at the 15-minute level? We came smoking down to it, and I was like, oh, yeah, here we go. Let's do this. And then we popped a little bit above it, and then we got what? The KOD. So kiss of death. Now, even if you took the trade on a confirmation entry, remember 15-minute chart, even if you took the trade on a confirmation entry, 1, 2, 3, 4, 5, 6 candles later, we had gone basically nowhere. So the overall soy, it told us, hey, that level's probably not as clean as we think it's going to be, so stay away. And you were looking at the wick over wick at 101 or 103. Immediately, my eyes go to this one here. Hold on, I'm on the 15-minute. Let me go to the hourly. The hourly is going to be much cleaner. I first go to this one here. But in this instance, where you have a wick over wick right here at 101 by 103, and then you've got a wick over wick here at 103 by 104, in all reality, when in doubt, just do this. Just take them both. Just take them both. And now, if that level then becomes too wide for you, what you could do is take the top of the lower one and include it in the upper one, okay? So if that level then becomes too wide, you can take the top of the upper one and then the whole, to the top of the lower one and the whole upper one that's up here. Now, I will say that when I look at the 4-hour, remember your 4-hour trend is still up. And so that still has to be a confirmation entry if you're going to take that, okay? Steve says, I believe meh. There's nothing wrong with that either. Okay, bonds, currencies, and Jose, we will take a look at the New Zealand dollar as well when we look at this. So yesterday we talked about the Aussie after the breakout trade that we had from the triangle pattern that had formed. That breakout trade was a pretty decent little run back up. Then it was the retest. Price moved away. We had a really good close opportunity for an entry here, making this a confirmation, and then confirmation entry that never gave us a true entry because it popped right below the zone. So now, as we've moved up, we've got a pretty clean wick over wick that's been established just below the pivot high right here. And that established wick over wick formed itself at a really good time of day. So 732, 7314, I think is a good spot to look for a potential on the reversal. In the euro, so the euro level, I mean, look at that son of a gun, right? I mean, we came right down to that thing yesterday. This actually strengthened the potential for the breakdown. Because we came so close to it and popped away, it actually strengthened the potential for a future breakdown inside this area. I don't know that we're going to get the breakdown inside that area, and I still have the same picture of a clean wick over wick that I had in the Aussie right here in the euro, formed at the same great time of the day. If you want to trim that down a bit, take a little bit more exposure off the table, you can go right to the 15 and just take this part of the candlestick. Now, I don't know that I would take both. I don't know that I would take both the euro and the Aussie because they're both basically the same level, right? So they're either both going to work or they're both going to fail. It's not like the S&P and the NASDAQ because these are both trading against the U.S. dollar. So really it's going to determine what the U.S. dollar does as whether both of those fail and both of those succeed. In the NASDAQ and the S&P, there's correlation, but they're not trading against the same thing, and that's why it's going to be different. Yeah, whichever one comes first is okay to do it. I think the key is that you just know that the risk of each one. And me personally, I like the Aussie a bit better than the euro. I think it's a little bit cleaner and a little bit smaller on that zone. Inside the Canadian dollar, I'm not going to add anything new to our existing lines. I think that we're in between some areas of imbalance and areas of supply and demand. That's a good point, Dennis. You could do that. You could split them up and take your risk in half and then just take both. So just go to smaller positions. Great British Pound. So in the overnight, in the pound, we did rocket up inside the overnight, came to this 15-minute level. Once again, as I don't do set it and forget it trades, I was not quite in front of the market at this period of time when price came into here. If you were in front of it when price came into here, 1, 2, 3, 4, 5, 6 candles later, you're still in the zone. So technically didn't hit your full stop. Wouldn't have hit your full stop. You probably shouldn't still be stopped out. Your stop should still be above this pivot. If we're really following the rules, your stop would go above this pivot. You should technically still be in it if you didn't follow the 6-candle rule. But the 6-candle rule says I'm going to get out of this thing before it ever hits my stop, because usually that's going to be a weakness, right? So I'm going to obviously remove this level, but on that rally up, that's that overnight strength that we saw in those markets. I mean, this is one of those super hidden little tiny wick over wick areas. Sneaky right in there. Stop got to go below the pivot. But that's the sneaky wick over wick area there. Stop just below the pivot on this setup. And then our Japanese yen. Japanese yen, we've come into the confirmation supply area. 4-hour chart that has us right up in here. Let me move to the 1 hour. 1 hour, we've got a lot of strength. So if you take this one, we actually just right now would have triggered it. So if you want to get short on this one, if you think this one's a good run, excuse me, your entry should be at about 95,255. So right down here. And then in my mind, your target on this is right here. So you've got a target right here and an entry right there. Now, if price breaks above 95,429 before giving you an entry, then you have no entry on this position. Okay? And that's a confirmation trade. So you can do a stop limit order right here. If you want to just set that up and then walk away, that's how you would do a stop limit order on this position. With your stop would be above here, your target would be right down in here. If we break above here before giving you that entry, it's going to cancel that entry altogether. All right. So that's all I have for today. Real quick update for tonight. We have an open forum session scheduled. So those of you that are going to join us tonight for the open forum session, I think Corey's hosting that one tonight and not me. I normally host the open forums, but we've been kind of moving things around a bit. So open forum session is 7 o'clock Central. This is let me pull this up here real quick, the Traders Army calendar of events. So this is our calendar. So open forum session tonight, 7 o'clock. Please bring any questions that you want. The idea is to ask anything that you want in there. And then our trading room is tomorrow morning at 7. So obviously no live on YouTube tomorrow. We will be in our normal live room. So no, we're totally clear, Dennis. Thank you for asking. We are way clear here in Houston. So it's no problem, David. Thank you for the reminder. Yeah, we're way clear of that hurricane here in Houston, but certainly prayers and thoughts for everybody that's in the panhandle of Florida, and it looks like it's really hitting Mobile, Alabama, and that area pretty well. So hopefully they're going to weather the storm. The big fear there is that they said that there's 20 to 30 inches of rain possible. This is a big rainmaker, and where I live, we got last year during Imelda, we got. Well, that wasn't Imelda. What was it? I forget which one it was. We got 40 some inches of rain, and it caused flooding in my town. And then Harvey 2 years before that got over 50 inches of rain. So these big rainmakers, man, they can get you. Well, what's funny is that where I live, we got, I think it was 2 of the top 5 rainmakers in the history of the United States within 3 years of each other. So, all right, so the New Zealand dollar's actually come to our supply level. This is actually a pretty decent area for entry on the supply. If you took that in the overnight, 1, 2, 3, you're 4 candles into that level not working out. If you still like the level and you want to get short, then I wouldn't get short. I'd do it on a candle-to-candle style, right? I would do the candle-to-candle style, and you've got a setup that would give you a first target down here at 673 and a second target down here at 67.13. Ultimately, I think that you've actually got a really good long trade right here because our big picture trend is definitely going up. And so I think that you've got a big picture trend in here. Okay? Boz, you guys need that rain. There is no question. I've always wondered why haven't we created a giant national pipeline to kind of just keep everybody's lines filled. Trent, that's not a bad idea, man. So, John, yeah, John, I actually was in the UK a couple of years ago when the remnants of a hurricane hit. Everything was closed. I forget what the remnants of the hurricane was, but it was a pretty nasty storm. I remember that. So, let's see. Joe says, one question, why are you saying to short JPY when you should be long? And so when I'm looking at the at the Japanese yen, the reason that we were talking about that was because we already had the level in place, right? Oops. We already had the level in place in the yen as a potential short. But now that level's canceled. Doesn't matter because we broke through the confirmation. And I already had that level in place. And the level itself was not a terrible level. But the fact that we broke through really cancels and makes that level invalid anyway. Ultimately, you should be looking at longs on this, and since we broke through, then very much like the New Zealand dollar that we just looked at, then you would look at this area down here. All right. Hello, Jane Maintain, Lakewood Grove. We met at Thrive. Well, good to see you again here in the virtual world, if you will. Yeah, new zone created, Joe, for sure. At 8 p.m. Are you talking? Let's see. Oh, 8 a.m. Okay, 8 a.m. I was going to say I don't really see one. Yeah, I mean, you could use this area down here that was just created as we've rallied off of it, but you'd want to do it on a 15-minute chart. I think if you do that, then you're looking at it right here off that 15-minute chart. Okay? Right off that 15-minute chart. Jose, I just did the New Zealand dollar, man. I think. Yeah, so we just covered the New Zealand dollar. So that was the price was coming into the 1 hour. We said that if you took the short, then you were sideways right here. Your your 4 candles into the 6 candle rule if you took the short. And now I'm still okay with the short if you want to go candle to candle on here, but just know that your first target's going to be right at about 67.32. You're looking at like a 1.5 to 1 reward to risk. And really, you've got a good long opportunity here at 67.14 by 67.03. I think that actually is a pretty good setup, especially because on my 4-hour chart, that's a clean pullback into a good area. All right. So that's all I have for today. Let me share this grid on the currencies. And then let me share the grid on commodities. All right. So what questions y'all have for me before I turn this thing off for the day? Anything else that I can do for you before we turn this thing off for today? And then that's also in the trade update feed. Justin posted a trade this morning for those of you guys that are in the Traders Army page about our NQ trade and the cancellation there, and then some of the other pieces. So take a look at that when you get a moment. But if any other questions come across, let me know. As always, shoot me an email. My email address, chuck.fulkerson@tradersarmy.com. Lee Burns, candle to candle, where can we find info on that? I've done a candle to candle video. I think it might even still be on YouTube. Hold on. Let me try to see where I've got it. Hold on, I'm pulling it up here on my other screen. Yes. So if you go to the website, go to tradersarmy.com, go to learn under OnDemand Courses. It's in our free trading videos. So all you got to do is be a free member, Lee, and it's right here where it says candle to candle style trading. There's a free video on it right there. All right, everybody. Well, I hope you have an absolutely amazing day. I appreciate you all joining us today. Once again, make sure that you share this with others so that they know that we do this. I'm trying to do it as often as I can live, and so far it's going pretty well. So, all right, everybody. I'll talk to you soon. Have a great day. See ya.